if you are wondering how to purchase a home, or if you're thinking that it is just out of your ability to do, or it's just overwhelming or whatever, this is the workshop for you. And we have some special guests today to also help with the home buying process and going through all the steps and everything. So we're gonna wait a few minutes and encourage everybody to come on here, and hopefully they got alerts that said, hello, we're here. But in case you're wondering, we do these, we are doing these every couple of weeks. So hopefully you'll have an opportunity to catch one of the lives in case you want to like add questions or comments or whatever, then you can do that. We also have a home buyer workshop workbook. So if you want to work along with us in the workshop, you can definitely do that. Go ahead and send us an email. We'll go ahead and have you send it to GER.ExpectMore@gmail.com, and then we will go ahead and email you the PDF of the workbook so that you know all of the steps and you can fill in the blanks and just kind of work with us right along. Cool. If you were here in person, then awesome, but here we are at CF this time. We've been going to community centers, public libraries. This is at CF, which is the local college, the Central Florida University College, and we are doing it here. So anybody that wants to join us is more than welcome to pop on by, and they can work in the workbook in live, in living color here. So, okay, I don't know. We've had a few people come on and go off. So I'm gonna go ahead and have Deanna come over and tell us all about what she does and who she is, and we will go from there. All right, go for it.
Hi everybody, I'm Deanna Chosewood. I am the producing branch manager for Bayshore Mortgage Funding. I run the Home Sweet Home Mortgage team here in Ocala, and I have been doing mortgages for about 10 years now. Love it. I love helping people get into home. First-time home buyers are one of my favorites because we get to guide you and get you into your first home and answer all your questions. It seems like it's a scary process, but it's really not. You have lots of support to help you through it all. Next up, I'm going to introduce Alati. She is your local real estate expert.
Hi. Welcome again. I was at one of the other, well, the first home buyers workshop we did this year. So again, I'm Alati Fonseca. I'm here with Great Expectations Realty. I've been doing this for quite a while. I've been in Ocala since 1995. So if you have any questions about Ocala and surrounding areas, I'm your girl. And we have some people saying hi, so hi.
Hello.
And we're gonna bring Andrea back in now.
Yay, okay.
Since she loves the camera. See, we really don't, right, Deanna? We're not really big on cameras.
I have a great face for radio. I don't know about.
I'm told I'm really good on camera, though.
Yeah,
I'm like, I don't want to be there.
Yay,
but...
awesome. Okay, so we have everybody saying hello, bonjour. Wow, all sorts of people saying hi. So today what we're going to be doing is our home buyer workshop. We do these a couple times a month, and we're going to go over the steps of home ownership. And if I forget anything, y'all are gonna need to help me out. Because I've done a few house sales in my time.
A few?
Yeah, a lot. Okay, a lot. Could probably do them in my sleep. But for a lot of people that maybe have never gone through the process before, it can be really intimidating. It can be really scary. And it's not. It's actually supposed to be a lot of fun. And there's a reason that you want to go ahead and purchase a home. The reason being is stability. If you are renting, you're like, I got this. This is way less, overwhelming. It's way less, stuff, responsibility and money and all this other stuff. Let me just go ahead and debunk that right now. Because we manage about 300 properties. So there's hundreds of families that, are renting and stuff. So for us, at least for me, we do property management, so it really doesn't matter to us. It's not going to affect our lives whether you rent or you buy. Doesn't matter to us. So you can take it as a truth, because if you rent, we're going to make money. If you buy, we're going to make money. So it does not matter to us. But I can tell you over and over again that families can get just absolutely messed up and torn apart because the seller passes away, goes into some kind of assisted living situation because they get dementia, or maybe they decide to sell the house, or maybe they just don't want to do property management anymore, or whatever. For whatever reason, no matter what happens with the tenant, they've been paying their rent, they've been taking care of the home, all of that. No matter what happens with the tenant, they no longer are allowed to rent that home anymore through no fault of their own. Once your lease is up, that's it. You could be asked to move elsewhere. And I absolutely hate that for them, but there's also nothing we can do about it. We don't own the house. So, and even the owner of the house, sometimes they can't help it either. I mean, there's situations that arise that they just have nothing that they can do either. So oftentimes we will have families that are like, I don't have moving expenses right now. I don't have the ability to move within 30 days. What am I supposed to do? And it's like, well, you're in a rental. It is a temporary situation. Renting is temporary. Even if you've been there for years and years, that can change on a dime. So there's no stability in renting. The other issue is if you look at what you were paying for a rental 10, 15 years ago, it's considerably more now. Can you imagine what it's going to be 10, 15 years from now? I mean, just think about that. What were you paying? Go ahead and put it in the comments. What were you paying for rent 15 years ago? That's not even a full mortgage. Full mortgage is 30 years ago. Can you imagine what you were paying 30 years ago for rent? I know for me, I was paying $400 a month for a full, huge apartment, $400 a month. I think water was included with that, if I remember right. So big, huge difference, massive difference. Even here in Ocala, back in 2010, I rented a 2-bedroom house, a very nice area. I rented it for $500 a month. That same house, if I were to rent it now, would probably be about $1,500 a month. So huge difference, huge difference. If I had purchased a home at the same time, instead of renting at that point, 2010, I could have bought that home for approximately $50,000 or maybe even less. They were going for pennies on the dollar back then. My mortgage would have been, I don't know, for
Probably about $400 and maybe $50.
See, we got to ask the expert.
I bought my first house in 2011 and I paid $52,500 for it. And
Okay.
my mortgage was less than $450 a month, and that included my taxes and my insurance.
Okay, so if you still have that same house today, what would your mortgage payment be? For if nothing
so
changed.
we sold that house in 2021
Okay.
for $210,000, and that mortgage would be probably about, now with the interest rates, probably about $1,400 or $1,500, depending on the taxes and the insurance.
Tried to do it at $200,000.
Yeah.
Okay, but what if you had never moved, never sold it, never refinanced, nothing? It'd still be about $500 a month, just because.
Oh, if it was the
taxes.
same, yeah. Honestly, I'd probably have paid it off by now.
So no mortgage payment. That's the goal. Live for free. That's awesome. So again, so stability there.
Mm-hmm.
But it said you sold it,
Mm-hmm.
but you had an asset.
Mm-hmm.
You sold it. And there's this funny, interesting law in Florida, actually across the United States. If you sell your own personal home and you make, let's see, if you're single, $250,000, married, $500,000, right? If it's 2 years that you're living in the house or more, that's tax-free.
And we were there for 10 years.
They were there for 10 years. So they made hundreds of thousands of dollars tax-free. Very different from renting a home. Okay, so you get stability. You also make money as you're living in the home. You're paying down the mortgage You're building equity. That's what's called equity, is when the house becomes worth more than what you originally bought it for. That difference in payment is your equity. That difference is what you don't have to pay taxes on if it's your own personal home. Investments are different. There's different stuff for that. That's not what we're talking about today. Today we're talking about your actual home, houses, home. So for homes, somebody wants to know if the girl with the glasses is single. No, nobody's single in this area, okay? But you got a good laugh. So, yay, fun. All right. The questions you get, sometimes not all about real estate.
Hey, you don't know if you don't ask, right?
Yeah, right. I'm gonna leave everybody else off the camera here today. Anyway, okay, so that's a lot of the reason right there that we encourage home ownership, is because families need stability. You can then also upgrade in house. We normally recommend that you maybe buy, if you're approved for 300,000, maybe stick closer to the 250, 275. Like, don't go to your max and be like, this is my forever home. It's not your forever home. It's your for right now home. Okay? So we need to get rid of that vocabulary. Most people statistically live in their home between 2 and 5 years. If you make it 10 years, awesome. I know both of you have been in your homes for quite a while. But most people, 2 to 5 years, that's generally when they go ahead and upgrade, or even sometimes downgrade in house. My husband and I right now, we're looking to downgrade in house because there's a whole half of the house we're not using anymore now that the kids have moved out. So sometimes it's like, okay, maybe we need a little bit less. So just depending on your situation, and as you go through different seasons and different phases of life, your needs are going to change. Your housing can change as well. Just because you have a 30-year mortgage does not mean you have to be in that house for 30 years. You can go ahead and sell at any point, and you'll probably go ahead and make money on that, so you can actually use that equity as a down payment, or to even go ahead and pay off your next house. A lot of people are doing that now, where they've got so much equity that they're like, I can go ahead and sell this house for $300,000. I've got $200,000 in equity. I'm going to go ahead and pay this next house for $200,000. I live mortgage free. That's pretty cool. They would not have been able to do that if they continued renting. So those are just some of the many reasons that we encourage people to go ahead and, for their own good and for the good of their family, go ahead and purchase instead of just rent. Not that we have anything against renters. We have lots and lots of people that rent from us, and renting is also excellent. Sometimes you aren't quite ready or qualified to purchase, and so that's a great time to go ahead and rent for a while. But again, consider renting temporary, okay? It is not a lifestyle. It is not something you do forever. It's temporary. So once you're done with that temporary living, now you've decided, all right, I've got the goal. I'm gonna go ahead and purchase a home. Cool, awesome. That is when you're going to get a hold of somebody like Eladi and Deanna. Okay, the other way around, but whatever.
Well, first you want to call me.
Yeah.
First you want to call me,
So,
so
yeah.
I can refer
Perfect.
you.
Yeah,
Get the-
right.
You get the pre-approval and send it to me.
Okay, so who does get called first?
Me.
You think?
They better.
Honestly, it doesn't matter. It really doesn't. Neither of them are going to hold that against you.
No.
But generally, I would have to say probably 90% of the time they do call the realtor first.
Yes, they do.
They do. They're like, all right, I'm ready. Let's go house shopping.
She says no. Get pre-approved.
You're
first.
not ready. You're not ready. We don't know what's in your wallet. You may think you know what's in your wallet. You know what you can spend on like a monthly budget, but what is your 30-year mortgage amount? What's the interest rate? What have you gotten pre-approved for? That's what they actually need to know. It would be like if you asked Eladi here to take you to the grocery store, which she's a sweetheart. Of course she would help you out. But what if you say, I have absolutely no idea how much money I have. I have no idea how much is on my debit card, my credit card. I don't know how much cash I have, but I'm gonna go grocery shopping and you're gonna take me.
Not a good plan.
It's not a good plan. That is not a good plan at all. So what we ask is, yes, of course we want to go shopping, but let's figure out your grocery list. Let's figure out what you want in a house, and let's figure out what you're actually needing to spend on your grocery list. Because I don't know about you, but if you go to Publix and just are like, I'm gonna buy what looks fun, you walk out of there with like way too much you've spent. So let's stick to a grocery list. So go ahead right now, and if you have a piece of paper and pen, if you don't have our homebuyer workshop thing print out, that's fine. You can go ahead and follow along with a piece of paper and pen. But go ahead and write down your wants and your needs in a house. What's the difference? What do you guys think is the difference between wants and needs in a house? Like, what would you say is an absolute need?
Amount of bedrooms, depending on family size.
Okay, so that's a need. Let's say you need 3 bedrooms minimum. You can't do 2 bedrooms, you gotta have 3. Okay, cool, that's a need. But you'd also maybe like to have a 4th bedroom. That's a want. It's not necessarily a need, but it would be nice. Okay, so if it's a need, you gotta have at least 3, but preferably 4. Okay, cool. So now you have wants and needs. Do you need a garage? How many spaces in the garage? Do you need a single car, but you want a double car? Kind of just keep going with that. I would like to have a pool, but I don't need to have a pool. Like, think about these things. I need to have a fenced yard because I've got small dogs, and if it doesn't have a fenced yard, I'm gonna have to put in a fenced yard, and that's an expense, and I'd rather just have it already. Think about these things, okay? So go ahead and put down your needs versus your wants, but scribble them all down, because sometimes when you go shopping with Alati, she will actually be able to find houses that have most, if not all, of your needs and even a lot of your wants. So to have all of that together is awesome. Looks like somebody gave us a thumbs up, which is nice. Thank you. Okay, so once you have your shopping list and you've talked to Deanna and you talked to her about how much you're pre-qualified for, we're going to talk a little bit about what the difference is between pre-qual and pre-approved. So Deanna, if you could.
Yes.
Could you explain the difference?
Yes. So you want a pre-approval versus a pre-qualification. A pre-approval means that everything has been verified. We've looked at your income and your assets and your qualifications, and this is definitely what you would qualify for. A pre-approval is basically saying, you told me this information, I didn't verify it, based off of what you told me, this is what I think you would qualify for. So it's not as solid as a pre-approval is.
Okay, perfect. So what exactly do they need to do in order to get that process started?
As far as doing a pre-approval? Mm-hmm. So either end of it, your first step is going to be submitting an application in so that we can review your information. To get a pre-approval, then you've got to submit in your documentation as well, meaning any income documentation, any asset documentation. Depending on circumstances, we may require other documentation as well. Whenever you inquire to apply, I would send you a list of everything that I would need from you, and anything that pertains to you are the items that I would need, and then I can send you a pre-approval. And typically I have a pre-approval out within 24 hours unless it's a more complex case, and then usually it's about 48 to 72.
Yeah, all of that sounds absolutely terrifying.
It's not terrifying.
So, I mean, I can literally see everybody just like shivering and cringing, thinking they're gonna go into this office that's all like glossy and like marble, and they're gonna sit down in front of a man with a suit, and he's gonna have a big stamp that says denied. That is what the thought, literally, I bet you that is what you guys are thinking, right? So what is the actual, like, what actually happens? You send them a link, right?
Yeah, I send you a link, you do the application online, it only asks you one question per page, it's very easy to follow, nothing too complex or crazy, it's very simple, and then once you've completed, it comes over to me in the system, I get it reviewed, I compile any questions, and then I get back to you to go over that, and then I see, okay, this is the programs that you'll qualify for, or if it's a not right now thing, I tell you, okay, I need you to do X, Y, Z, and this is how you'll qualify for a loan. So it's never ever going to be a, nope, sorry, I can't help you. It's going to be either a yes or not right now, this is our path we need to take. I always take the time to help you achieve homeownership because that's the goal here.
Right. You don't get paid unless you actually.
I don't get paid unless I close a loan.
Yes, so we actually need to close the loan. That means getting you keys.
Yep.
Otherwise, there's nothing she gets. So, like, it's a goal, okay? She does not want to say no.
So it
right.
doesn't help me if I don't help you.
Right. This is food on the table, okay? So we got to get to that point. So yeah, running applications and stuff like that. Now, is there any charge for the application?
Nope, there's no charge for submitting an application in, and until we start moving forward with a loan, that's when you start seeing fees occur. But typically, most of those are paid for as part of your closing costs. Every lender has fees, lender costs for closing a loan, and those are all part of your closing costs. So nothing any extra.
That also sounds really kind of terrifying. So let's go ahead and go over some of the costs and expenses that you can expect as we go through the steps of home ownership. So one of the first things that you're going to do is go ahead and get your pre-approval. You're going to go ahead and submit paperwork. Deanna's going to say, all right, here's how much you're pre-approved for, go shopping. Aladi's going to take your wants and needs list and she's going to take you shopping. And it's a blast. It is a lot of fun. So you go and do that. You find a house. You go ahead and make an offer on the house. She's going to give you a contract. You're going to go ahead and fill out the contract and she's going to actually fill it out for you. And then you just sign an initial. But she's going to go over it with you. Okay. Then you're going to, on that contract, state some very specific things. One is when your closing date is. Normally, it's about 30 to 45 days from when you make the contract. So some people are like, okay, I'm gonna buy a house and you're moving in next week. That's not that's not how it works. We would love that. We would love that for you, but that's not how it works because there's a lot of other steps involved. So it does take about 30 days to 45 days. So what I want you to do right now is write down the perfect day for you. The perfect day for me to hand you the keys to your new home, moving day. What day is that? Okay, so if that date is like December 2nd, I mean, who knows? Whatever random date is, it doesn't ever need to be this year. It could be next year. Whatever date that is, count back 45 days from that. And then that's your contract date. And then you still have your shopping and your pre-approval time frame. So I would give about at least 2 weeks to a month for that. So we're talking at least 2 to 3 months from when you start the process to when you get the keys. Okay, so it is kind of a lengthy process. So some people are like, I'm not ready to move yet. It's not going to be for a couple months. Should I even be talking to you? Yes, you should. Yes, you should. Those are the ones we like. We like those customers that are like, I have plenty of time and we don't have to rush and we can make a decision and it's all great. The ones that are a little bit more chaotic are, and I have had somebody do this, I need to find a house within the next 7 days and I need to close within that time frame. I have had that happen to me one time. You know who you are. And I can't say that I actually slept much in those 7 days. I was definitely spazzing. And it was a cash deal because you cannot get financing in that time frame. But it was a little harrowing. Because there wasn't really much time to go shopping. There wasn't time to really do an offer. There wasn't time. It was lived in. They needed to move out. There was a whole bunch of stuff. Inspection, all of that. It was a lot. So don't do that. Don't do that. Go ahead. It's better to contact us, even if it's not for another year or two. Go ahead and let's get at least the process started and at least, start talking about locations and what side of town or county or whatever, because there's a huge area that we cover as well. So just get that conversation started in advance. That's totally and completely fine. Nobody will be mad at you if you're not buying right the second, okay? Totally fine. All right, getting past that, let's say you have your contract, you've got your closing date. Another important date that you need to remember is also your inspection time frame. Aladi, will you explain what an inspection time frame is typically and kind of go through that process?
Typically, it's 10 days on most inspections. You can get up to 15, but sellers half the time will not accept a contract with 15. So typically, it's 10 days. Within those 10 days, we have to schedule an inspector to come out. They do the full inspection of the property. At that point, we can decide if this is the home for you, if it needs a lot of repairs, if you want to back out. Within that inspection period is the only time that you can actually back out of a contract.
Right. So that inspection time frame is extremely important.
Very important.
So if it depends on which contract you go with. There's different contracts that we have that we work with, but normally we work with one that's called an as-is contract, and that one allows you to walk away during that inspection period for any reason. Okay, now that's a Florida Realtors contract. They have two main ones that we use. So there, if you're in a different state or a different area, obviously you're gonna have different contracts. So check with your real estate agent over there. But for here, we either have a regular purchase contract or we have an as-is purchase contract. Now, as is does not mean necessarily that you have to take the house as is, but it does allow for you to walk away if you just decide that the grass isn't green enough for you. Like, it's for whatever reason, literally for any reason, you can walk away during that time frame. So again, that's why the sellers don't necessarily want to give you 15 days, because after 15 days, you're halfway through the contract, they're already prepping to move, and all of a sudden you're like, the grass isn't green enough, I'm out. And they're like, ugh. So that's another important thing on contracts, is that inspection period. But it's very helpful because, as Alani said, there are really about 4 things that you can do in that inspection time frame. If you're looking at the house, the inspector looks at it and he's like, well, there's this issue, this issue, this issue. I've never ever seen a perfect house. Never.
Not even new construction, honestly.
No, sometimes they've got a lot of issues. So I've never seen a perfect house. Each one has its own things that might need to be fixed, touch-ups, whatever. There's just certain things that need to be fixed. So when you have that, you have 4 options. 1, you could just accept the house and say, you know what, it's a few little piddly things. I can go ahead and take care of those. I'm not even gonna worry about it. Cool. So acceptance is one of the options. The second one is you're like, I'd really like that fixed before I get the keys to this house. So I'm not gonna close unless the seller goes ahead and fixes those things. Okay, that's another option. Another one is, I'm gonna go ahead and take care of those things, but I would like for the seller to pay for those repairs. I've got a friend that can do this, or I can go ahead and do that, but I'm not gonna pay for it. I want the seller to go ahead and pay for those options. Okay, so you can ask for a credit or some kind of something at the end or whatever. Okay, cool. The last one is walk away. You can go ahead and say, this house is crazier than a bag of cats. I'm out. I do not want to deal with all of this. Let's try and find something else that doesn't have quite so many issues. I don't want issues. I would like less issues. So those are your 4 options. Those are really the only 4 options that I know of. If y'all can come up with another one that's like number 5, that would be awesome. But I've been doing this a while, and those are the 4 I've seen. So those are your 4. Okay. Another thing that you have to keep in mind is there's a little amount of money that you need to put on the house. It's not your down payment for the mortgage, it's your deposit to show the seller that you're serious. And it's not quite a date, but it is something that you have to keep in mind, because normally on the contract, it says you have within 3 days to get that over to the attorney's office or the title company. So it's another date that you need to keep in mind, okay? Sometimes the contract is written so that you have to do it when you sign the contract. You also have to sign the check. It just depends on where you are and what they're putting in the contract and what's normal for that area. It really just kind of depends on the state you're in or what area you're in. Here, it's pretty normal for you to put 3 days, and normally the title company or attorney's office, as we use here in Florida, they're going to want you to go ahead and just wire it over to them. They don't even necessarily want or need a check. They'll just be like, just wire it to us, we're good. So once they have that in there, you're golden. Now, how much of a deposit are you talking? Well, that's up to you. It also depends on the house. If you're gonna buy $1 million property and you're like, I'm gonna go ahead and put $1,000 deposit, not gonna fly. That's not gonna fly. Normally when you're doing like anything over $1 million, it's normally like 10%. They want to see that you're actually serious and that you are able to have the closing fees and all of that stuff. So sometimes if you're doing just a regular house, when I say regular, that's median house price here is about $275,000, give or take. 265 now? Might be 265. Yeah. So if you're going to do something like that, it's probably going to be about $1,000. $1,000 is perfectly reasonable to put down. Does that mean that the money goes to the seller? No, it goes into a little escrow account and it's held there. So if you walk away within the first 10 days, while your inspection period, you get that money back. It's yours. And at the end of the transaction, when you go to closing, that money goes towards your closing costs. That's your money. It's just kind of being held there in case you lose your ever-loving mind and just decide, you know what, the sky is not blue enough, the grass is not green enough. I know it's closing day, but I'm out. The seller then gets that $1,000 as like a consolation prize. Not much of a consolation prize. That's why if you only put like $100 or $200, they're like, no. I want something for keeping this house off the market for 30 to 45 days. So, okay, cool. We got a couple more likes. So, yay. All right. So, you've got your dates in mind, but don't panic. Okay. I have actually seen somebody in the classroom panic before because they're like, oh, escrow date, inspection date, what a closing date. Like, they're freaking out. Okay, do not freak out. Eladi is going to keep you on task, and she's going to keep you informed as to all your dates. That is her responsibility as your real estate agent, to be like, okay, and did you go ahead and make your deposit? How much of a deposit? Let's talk about that. You keep them all on track, right?
Absolutely.
You've got software for that. And Deanna, she has software for that, for your closing. She knows exactly what paperwork you need on what days, and if you don't, it's going to be late. So we don't want to have those issues. So both of them, they're going to help you out. Okay, you just follow the recipe, just follow the steps, and you get the brownies in the end. It's great, or chocolate chip cookies, or whatever you're into, whatever. You get that at the end as long as you follow the steps, the baking steps. Okay, so what's another baking step? You've gone ahead and done your contract, okay? They accepted the contract. You've got signatures. You actually have a contract. You went ahead and you put your escrow amount, let's say $1,000. Okay, cool. You're in your inspection period. So you went ahead and had the inspector come out. The inspector says everything's great. You have to pay the inspector, okay? We're talking about money here. So you have that $1,000 sitting in the escrow, and out of pocket, you're going to need to pay your inspector. Now, once you have that inspection result and you've chosen one of the 4 things, and let's say you've decided to just take the house as is, okay, you can deal with this little thing, whatever, then you're going to go back to Deanna, because that is when she's going to have something that you're going to need to pay for as well. But it doesn't go to Deanna.
No.
This is called an appraisal, okay? This is where the bank is like, okay, you're sure you want this house? Cool. But we're not sure that you want this house. We have to make sure that what we're going to loan you is actually a valid amount. So we're going to check on the houses in the area, and we're going to check that house, and we're going to say, yes, it's worth that amount for that area. Make sense? Okay, so those appraisals are ordered by Deanna, but she's not the one that actually does them. I've never actually seen you like
No.
measure a garage or something like.
Conflict of interest.
Yeah,
not
right.
allowed.
Yeah, she ain't doing it. She's just gonna. She got a guy, but yeah, there's a whole list of them, and it has to go. There's a whole bunch of laws around that. Anyway,
Yep.
she's gonna send the appraisal out. You're going to pay for that. Normally, it's paid up front. It's not.
It is.
Yeah, it's
Yep.
not normally paid on the closing cost. So that's something you need to be aware of. And I think right now it's going right around $500.
Usually $500 to $650, depending on the type of loan, complexity of the home. So all of that comes into.
Yeah, if you're buying $1 million house, the appraisal's not going to be $400 or $500. It's not. It's
Yeah.
No, it'd be a little more than that. So we're gonna say right around. $500. Okay, so that's another thing that you're gonna need. So far we've got about $1,000 just sitting there in escrow. You haven't lost that money. It's just sitting there. It's tucked away to the side. You've got your inspection, which is normally right around $400. Depends on what you order with it. You could order an inspection that has everything from termites to well to septic to lead-based paint. Like you can get something crazy or something basic. It's totally up to you. So I'm gonna say an average for this particular area is right around $400.
I do
depending
want to
on the size
add
of the
though
house.
that
Go ahead.
sometimes you are required to have certain inspections depending on the type of loan that you get. So
True.
if you are doing a government loan, so an FHA, a VA, or a USDA, depending on the home and the loan, you may have to have a water test or a septic inspection or a
Very true.
WDO termite inspection. As well as your insurance. When you are shopping for insurance, the insurance companies, depending on the age of the home, might require you to provide them with a 4-point inspection or a wind mitigation as well. So those are things that you would discuss with us before the inspections are ordered. So it's not something that you have to remember,
Right.
but there are sometimes required inspections.
And honestly, I always advise it anyways, especially the wind mit and the 4-point, because it gives you a discount on the insurance.
It does give you a discount on your insurance, so it's well worth
I think it's good for like 4 years, 5 years,
Yeah,
something
so
like
it's
that.
always worth getting.
Yeah,
it.
it's like getting a free inspection, basically.
Right,
Because
because the inspector's already there.
yeah, so the wind mit is definitely wind mitigation. Sorry, I know they don't have that in all states, but here in Florida, we have these things called hurricanes. Not so much in this area. We don't really have hurricane force winds by the time it gets to us. But we still have the same building code here as they do in other parts of Florida. So wind mitigation is basically how durable your roof is going to be in case of a storm, essentially how it's been built. So there's it's a whole other thing. Anyway, so to have the roof inspected inside and out is called a wind mit. That's shortened version of it, basically. So you can have it, even if you own a house already, you can actually get a wind mit anytime. They're normally about $100. But you get a discount if they're doing the home inspection and they go ahead and do it at the same time. So you might as well just do it at the same time. Because again, homeowners insurance is going to give you a discount for like 4 or 5 years because you had that inspection done and they deemed your roof A-okay. Cool. Fine? Good? Yeah. Okay. We're trying to keep this as basic and simple as we can because again, we don't want you to be overwhelmed. We're giving you a lot of the information, but a lot of this stuff is just stuff that we deal with every single day, and we just go ahead and take care of it, and we help you, and we get you the right people, and we get you all this stuff set up. But we want you to at least understand the process. Cool. All right, so you've got your inspection, you've got your appraisal. What we wait for is the appraisal to come back and say, yes, the house is worth what you're paying on it. That's basically all we're asking. That's it. So when they say, has the appraisal come back yet? That is slang for the person has gone out, deemed the house worthy of the amount that the bank is actually paying for it. Because again, you're not paying the full amount. You're not paying that. We're going to say median house price $265,000. You're not paying $265,000. The bank is paying that. So the bank wants to make sure that the house is indeed worth $265,000 instead of, a shack in the middle of freaking nowhere and it's worth $40,000. They want to make sure that it's an actual valid, and they want to make sure the house is there. That's also kind of a thing. Anyway, so they're going to go out and do that. You're going to pay for it, and you're going to know how much the house is worth, which is really helpful. Okay, so then we go on to the next thing. The next thing is to get a survey. Now, there is a little bit of debate as to who actually is requiring the survey. Don't even get started. She's like, it's not us, it's not. Okay, so there's a little catch-22 with surveys. Okay, survey is on a regular house. We're gonna say quarter acre lot, whatever. Is right around $500-600. 600. We'll say
almost close to 6 right now.
Okay, so we're gonna say $600. So what? You're out $1,600, give or take, maybe under $2,000. $1,000 in escrow. Okay, cool.
Yeah.
The survey's usually paid for at closing, though.
You can have it paid for at closing, correct. So,
Yep.
and a lot of times that's good, and we'll get into why. But worst case scenario, you're out maybe $2,000 plus you got $1,000 sitting over in the escrow. Okay, cool. So what does a survey do? They tell you what part of the yard is yours, which is super important in case you ever want to put a shed out or if you want to put a fence up. It's really helpful to put the fence on your own freaking property and not on the neighbor's, because the neighbor can then come along and say, take it down. Yeah, we don't need that, okay? Let's not do that, okay? So you need to know where your land is. Wouldn't it be awful if you bought a house and then you find out half of the house is actually in the neighbor's yard? That would be terrible. So we get a survey.
I've had that
Now,
happen.
have you really?
I did. It was surveyed, and the gentleman had a fence up already, so the surveyor had to actually jump the fence to put the stake in.
So the fence was on the line.
I was
not
about to
the
say
house.
the house.
No, not the
Oh,
house.
God.
Okay.
The fence. Sorry, not the
I
house.
was like, I do not remember that paperwork or that particular lawsuit.
I feel
So
like this would have been one we remember.
Yeah,
Yes, no,
but that
sorry.
actually happens fairly
But it does
often.
happen.
Yeah, it does
Yeah.
happen fairly often. Sometimes it's because a tree is in the way and they're like, oh, I'll just go around the tree. That's not your property. That's not your property. So yeah, for that survey, it's extremely important. And you're going to need the survey in order to actually get the loan. You have to have the survey on there in order to get the loan. And I believe the homeowners insurance, who is it that requires a survey?
The survey is required by the title company to issue clear title because they want to make sure that there's no encroachments on your property, meaning what she said of somebody else's property encroaching onto your property. So their fence or their shed or you encroaching on their, same
Right.
thing, vice versa.
And I'm laughing because I've asked a title company and they said it was because the
So in order for a title to issue a clear Florida title, they have to see where the actual property lines are so that they know that you clearly do have clear title of every inch of this property.
Right.
It's also going to show you any utility easements that the county may have on your property as well, so that you know if the county had to come in and do work to utility lines or something, where those lines lie as well.
Yeah, I actually just saw that recently on a Facebook comment. The woman was furious. She was so mad because the utility company came into her yard and tore up the back part. And I'm like, nope, technically that's theirs. They have an easement because they have you enjoy having electricity, but there's electrical wires and stuff that have to go places in order for you to get what you have. So yeah, in a lot of people's front yards or backyards, there's sewer lines, there's cable lines, there's electrical lines, all sorts of stuff that are just buried, and they need to have access to that at times.
But they are required to put the property back the way that they found it.
Yeah. So her yard will get put back to how it was. But yeah, she was mad because they were in her yard. Technically, if they have an easement, they have rights to do that. But thankfully on the survey it will show that. It'll show exactly where all of that is and where it's buried and all that fun stuff. So very important information to have. Okay, so you have the survey, you have the appraisal, you have the inspection, you've got your money sitting there in escrow. What is one of the final things you have to do? Get homeowners insurance. Yay! Okay, because you have to have homeowners insurance in order to get the loan. They don't, it's the same as a car. Like you can't go ahead and purchase a car and drive it off the lot and have a loan on it without having car insurance. Same basic concept, okay? They don't want you to have the keys to the property and then you burn the house down and then you've now got a loan on something that is cinder. That is not fun. So they want to make sure that it's covered, that their interest is covered. So they will not close on a loan without that homeowner's insurance. You can go ahead and start the process of the homeowner's insurance at any point, but why bother if you don't know for sure that's the house you're gonna get? So I normally wait until after the appraisal has come back. That's when I go ahead and say, go ahead and get that homeowner's insurance. We're on the final portion of this, so go ahead and order that. Normally you don't have to pay something necessarily right out of pocket. It can go at closing, but it just depends on the company and what they require and everything. So I would say call around and see what they actually require. But again, probably going on your mortgage and your closing and all that fun stuff. Now, why is it important what goes on closing and what doesn't? This is the fun part that a lot of people don't understand. If it's going on the closing, a lot of times we can actually have the closing costs paid by the seller. We can also have something called a down payment assistance loan. There are a lot of different options, and Deanna, I'm gonna go ahead and put you on the spot again and have you go over some of the other loans that can be put on top of, or some of the grants and stuff that are available to people.
Okay, so I consider anything you pay prior to closing and at closing all part of your closing costs. If you get down payment assistance and the program allows you to get cash back at closing, or if the seller contributes towards your closing costs, If I can prove those funds that you paid prior to closing were paid out of your bank account, so I see it clearing your bank account, I can actually have that get you money back at closing or deduct that out of your minimum down payment. So something that I do like to mention is trying to pay that out of your actual bank account rather than using a credit card is very helpful if you are getting any type of assistance towards your closing costs, because any funds that go into the purchase of the home are considered a type of closing cost, whether we require it for the loan or not. We want to see that you've paid those so that I can deduct that from the funds that you are required to pay. Do you want to mention something?
Go ahead.
Okay.
Yeah.
As far as down payment assistance, there are quite a few down payment assistance programs available. I don't know for other states what are available, so this is pertaining to Florida only, and depending on the lender if they're approved for the assistance program or not. So there are county assistance programs, which are typically called your county SHIP program, SHIP. And that is handled on the county basis, and depending on the county will depend on what their qualifications are and what their guidelines are for those. For Marion County, they give assistance up to $100,000 for a purchase, which is really, really great. But they also deed the house differently, so it's important to get educated on that side of it prior to deciding that's the route you want to go. There's also down payment assistance programs through the state themselves. So right now we have the Florida Bond Program, which gives you up to $10,000 towards your purchase for down payment assistance. And then there's also Hometown Heroes, which recently got funding back, and that is specifically for specific job titles that work in the state of Florida. So there's a list that we have to go by to see if you qualify, and you can qualify up to $25,000 in assistance with them, depending on the loan amount. They give 5% of the loan amount with a minimum of $10,000 given. And then there's several others as well. I am also approved with Escambia County, and they do theirs a little different than most counties. Escambia County works with several counties across Florida. They don't just work in Escambia County, and they also give up to $10,000 in assistance. So kind of similar to the Florida Bond, and I look at both of those programs for applicants because Escambia County's rates sometimes are a little bit less, but the bond qualifications are a little bit different as well. So it's just taking a look at everything as a whole to see what you would qualify for. When you do submit an application, I take that into consideration when I am reviewing an application on, okay, this is what we're looking at, this is what you have for assets, here are the options I have, and then we're going to go through and discuss whether you feel like this is a good option for you, because the majority of these programs are not forgivable. So when you do get them, it is placed as a second mortgage that's not forgiven and eventually has to be paid back depending on the program guidelines, and we would go into detail to discuss each one particularly so that we can make sure that it is a good choice that you're making and that you're using them.
Okay, but the ones that have to be paid back, it's normally when they go to sell the house, correct?
Typically, it is if you refinance the house, because they're not, they don't allow you to subordinate, which means, that just means keep the second loan. It's a fancy word for keep the second loan. Or if you sell the house, or if you meet the term of the loan, which is typically the 30-year. When you hit 30 years, then the note is due, typically.
Yeah, so not a big deal, not normally. Okay, so let's get into like the final numbers for this real quick so you guys can really understand. I want to really bring home the difference between the rental and what, moving cost is for that, and a purchase and what the moving cost is for that. Okay, so let's say we're gonna say that $265,000, because that's the median price here in Marion County, and you can in fact get a brand new construction 3-2 double car garage concrete block home with granite countertops and stainless steel appliances and everything for that price right now, easily. So actually maybe even a little less. Okay, so we're gonna use that $265,000 median price because that's nice cookie cutter basic home. Okay, so let's say you've got your $1,000 of your money sitting there in your escrow. You have, what do we come up to? About 2,000?
About 2,000.
Yeah.
Give or take, probably a little bit less actually. About $2,000 in costs associated with actually purchasing so far. Now you've gotten to the closing table, and we're going to go ahead and say that the seller is contributing to your closing costs. And maybe you have a down payment assistance program, so they're paying that. So that means, what do they need to bring to the closing table?
If they had down payment assistance and seller credit, it might be nothing.
We just have
A check.
Yeah, and they got money back at closing. The majority of what they.
So it works.
So you get a check written to you from the title company or wired into your account with your escrow, because that was sitting there, that's your money.
Now that's case by case.
It is case by case, that is not a promise, but that happens
Quite
frequently.
They didn't even get down payment assistance. We just had seller credit, and it was a USDA loan down payment, and
Yeah, because how much, okay, so for a conventional loan, how much down payment is needed on a $265,000 house normally?
for a first time home buyer, 3%,
3%. Okay, and for FHA
3.5%.
and for VA
VA which is the loan for veterans is 0.
and for USDA?
0.
Okay, and USDA has a stipulation that it can only be in an area that USDA rural housing is for, but for here in Marion County, that's
The
anything,
majority. Yeah.
that's anything outside of the city limits of Ocala. And our county is just shy of 1,600 square miles, so I'm gonna say that's a lot of area for you to choose a house in. For Citrus County, it's
It's all of
everything
it.
except the courthouse. I don't know why, but they have this
One block.
little block,
That's
which is
funny.
just the courthouse. It's yellow on their map. Like, nope, you can't buy the courthouse. Well, dude, who would? But okay. So the whole county, Levy County, which is also adjacent to us, the entire county. Parts of Alachua, which is Gainesville, is the main city in Alachua County. Parts of Alachua County are also included. So I'm gonna say there are thousands and thousands of miles of houses, not thousands of houses, thousands of square miles of houses that you can choose from that would qualify for the USDA.
And some are in
financing.
neighborhoods. It's not like you're just out in
Oh, yeah,
a
no, mine
rural
qualifies.
area.
Yeah.
Yeah. So
Yeah.
it's when you think of that, don't think it's limiting you to having to be out in the middle of the sticks or anything like that.
No,
You're-
no,
Yeah.
it is literally, you here, this side of the road is the city of Ocala, this side of the road is not. That means that side of the road is more than welcome to go ahead and do USDA financing on it,
Yeah.
which means 0 down payment required.
And there's a map, so basically we would just plug the address in and make sure that it is in a qualified area.
Yeah, generally just ask your realtor and say, hey, I want to do USDA financing. I've got pre-approval. Her pre-approval is going to go to your real estate agent, and your real estate agent is going to be like, oh, you need this, 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 and this. Okay, cool, let's go. So she'll have part of your shopping list basically right from your lender. So easy on that one. Okay, so that is what is required if you go to, like, financially, if you go to purchase a home. The only stipulation that I will say, and I forgot to mention this the first time around when we did this home buyer workshop, is if you are buying new construction, there are some differences in that because the builder is probably doing the financing. They don't have to, but normally they will give you closing costs and other things if you work with their lender. It's a very, very different process. Also because, they also already have the survey, for example. There's a lot of differences with brand new construction homes. So please keep that in mind. Also, if something is in an HOA, there's a few variations with that. So we're just using as a basic example of sales that we see every day. But if you're doing a variation, there are going to be some variations in this. Fair? Okay, cool. Because I forgot to mention how new construction is a little different. And normally their escrow amount is a set specific amount for that particular builder. So Lennar has, I think, 7,000. I don't know. It depends. But generally 5,000 or 7,000, depends on the builder.
It depends on the builder. Your
Right.
bigger builders are gonna have probably a larger amount than your smaller builders are. The bigger builders are the ones that typically have their preferred lenders, and that's how they give you larger closing cost incentives, because usually they own the lending institution,
Right.
so they have that ability to do
They
that.
own the title companies, the
Yep.
lending institute, all of it. So
Yep.
it's
Smaller
a
builders
very
may not have
right.
the survey
Right.
either, but they do also still give closing costs sometimes.
Right.
So it just depends, and it's all in the negotiation.
Right, absolutely. So we're using as an example just regular real estate, but there are some variations to this, so just keep that in mind, especially with new construction. All right, that all being said, let's go ahead and explain, which you probably are already familiar with, what happens when you go to move when you're in a rental. Aletta, you want to explain?
We need,
Now,
not
what's-
we, but
what's
not,
the
not as a
average-
property manager. Hold
What's
on.
the average rental price right now for that same 3-2 double car garage concrete block?
Close to 2,000.
Okay,
You're
All right.
anywhere from 1895 to 2,000.
Yeah.
So the day, and again, we have tenants that purchase all the time.
Right.
So we do need a 30-day notice.
Right.
Is all that's required. So
Right.
from the day you go under contract, if you're a tenant, any apartment complex and your lease is up, you gotta give them the courtesy of the 30 days.
okay. So and some of them they want 60 days. It depends on their
Correct.
lease. Now, that being said, if somebody were to move into, and we're not gonna use ours, because ours are a little bit different, but
Right.
let's say they're gonna go ahead and move into an apartment complex. And we're gonna say that their apartment is valid, about $1,800. Let's go ahead and make it a nice even number for math in our heads. Let's say 2,000. So 2,000, give or take 100 or two. So $2,000 a month. What would be their moving expenses for moving into an apartment?
Well, they need their rent, you first. Most of them are asking for last, and security.
Okay, so we're up to
That's
$6,000.
$6,000.
Okay,
Yeah.
plus application fees.
Plus application fees, plus the, to have power.
The
all
what?
that- To have power turned on.
Well, you
Like
have that with the
security,
sales.
You have that with the sales too.
And pet fees?
And pet fees, you don't have that when you buy a house.
No.
But you got pet fees and pet rent.
Yeah, so pet rent is normally, it can be anywhere from $25 to $50 per month per pet. And normally you're gonna see non-refundable pet rent or pet deposits. So it's a deposit but that you don't get back.
It's a fee.
So it's a
pet
fee.
Yeah.
Yeah, so you'll see a pet fee of anywhere from $200 to $500 per pet that you are moving into said rental. So you have the pet fee, then you have the pet rent, and you also have pet applications, and sometimes there's application fees on the pets too. You have none of that with sales. It is your house, it is your problem. So nothing like that is on there. So if you have 3 dogs, it is a considerable expense. Even if you're going on the low end of $200 of non-refundable per pet, that's still a good $600 for like 2 dogs and a cat, or whatever variation thereof. There are also stipulations. Maybe they won't take ferrets or I don't know,
Parrots
snakes
or-
or parrots or I don't know. There's a whole bunch of stuff that you just can't do when you're renting because of the higher risk for damages and stuff in them. And it's up to the landlord. If the landlord doesn't want it, it's their house. You have to go by what they want because it's their house. When you're purchasing a home, your house, your rules. So if you want to fill it with rattlesnakes, knock yourself out. I personally wouldn't, but to each their own, to each their own. So yeah, there is a huge difference, significant difference in the moving expenses when you're going to rent. If you go to rent a house, that same exact house that you would get a check back at times for buying,
And you'd probably pay less.
I know, per month,
Per
you're
month, yeah.
Per month, you'd pay less.
$265 basic average. I know I'm putting you on the spot and that's horrible because it really just depends on so many different things.
Ours was
265.
268.
Oh,
Okay,
perfect. Okay.
268, I think they were at 1,800.
1,800 a month with taxes and insurance.
Yeah.
Okay. So 1,800 versus at least
2,000.
Yep. and the
2,000
house is a
with the
couple
pet
years old.
fees and stuff like
2
that.
years old.
2 years old. Yeah.
So you recently just had a closing.
Yeah.
That they got money back at closing.
So they got money back instead of paying money in, or the option was they could go ahead and rent and pay
Their rent was more than that.
6,000 just for moving in. And then what happened when you sold your house? You bought it for 50. What
I
was
bought it for $52,500, and actually, I asked her. I was like, I sold it for $220,000.
I was her listing agent.
Okay.
We listed it for $235,000 and it appraised low, so we negotiated with the buyer, and I came down on the price to $220,000 where it appraised. Yeah.
Okay, so you sold it for $220,000 and you got to keep all that money tax-free.
I did, and then I used it to go towards our new house because we were upgrading our house, so I put half down on the new house.
So you got instant equity in the new house.
Mm-hmm.
And we have hundreds of people that rent. I'm just saying, renting is fantastic in certain situations, but it is temporary. So just going back to what we said at the beginning, exactly 60 minutes ago, renting is fantastic, but it is a temporary situation and it is not a stable thing for the long term. So highly recommend, not for me, because again, I rent properties out and we sell properties, so it really doesn't matter to me when you do you. But if you want the education on this, this is why we highly recommend, if at all possible, go ahead and start your plans to go ahead and purchase a home, because in the long run, it's better for you and for your family. Any last comments, ladies?
Call us if you want to
Yeah.
purchase a home.
Yes,
Call us.
how did they reach out to you? Please give them your contact information.
So if you want us to send you over any information, just type your email in and Andrea will help us with getting all of our information sent over to you. You can reach me at dchoswood@bsmfunding.com.
Can't forget that. That's BS more. That's pretty good. I like that. That's not what it stands for. Not what it stands for.
That's hilarious, and I didn't even really put that together till just then. Thanks.
You're so welcome. You're so welcome. We'll do it live.
Or my contact number is 352-42.
Yeah.
352-496-1883. Thanks.
One more time because I was laughing.
352-496-1883.
Awesome. And Alani, how do people get in touch with you?
You can find me on our website at GreatExpectationsRealty, Ocala.com, or just GreatExpectationsRealty.com.
What in the world? You don't know your phone number. She doesn't know the website.
That was your fault.
I know, but you confuse me because I go on the property management one all the time now.
Okay, so yeah, property management one is on there. If you want to look at a list of our rentals available,
Why
check
don't
to
we
see
just
we're
put
right.
it in the comments?
Yeah, that would be good. We're gonna go ahead and put it on there. I'll put it. It's in the description. It's in all of our descriptions. It's GER.PM.com is for our property management. Great Expectations Realty Property Management. That's what it stands for. Or you can go ahead and reach out to us. All of her contact information is on GreatExpectationsRealty.com. Super simple.
My number, though, that one I know by heart.
I don't know about
That
it at
one
this
is-
point.
I know. I might get confused with hers.
heart if you forget.
It's 352-454-4099.
Yeah, I had it right. Okay. Yay. I barely know anybody's phone number anymore. My phone knows these
Well, I
things.
don't even know my own phone number, so
If
there's
you
that.
do not feel comfortable putting your email address in the comments, that's perfectly fine. I will go ahead and put mine for you. It's GER.ExpectMore@gmail.com. And let us know what you would like, what you need, what you thought of our video, or you can put that in the comments. Be kind. We're nice people. Please try and be nice to us. Yeah, let us know what we can do to help. And even if it's, 10 years from now, you're like, hey, eventually, at some point, I'm going to purchase a home. I have questions, though. That's totally okay. We're great with questions. Questions are free. We answer them for free, obviously. I've just spent an hour and 3 minutes explaining things. So we should be good. Thanks so much for hanging out with us. We'll catch you next time. Bye.
Bye.